CNBC TV18 and IndiaBonds presents Bond Street.
Well, thank you so much for that. Welcome to our special segment, Bond Street. And we're looking at Muthoot Microfinance CEO Sadaf Sayeed, who joins us now to talk to us about bond markets there. Mr. Sayeed, hi, thank you so much for joining in. Well, about Muthoot Microfinance business, first of all, where do you see major lendings coming in, the size of it, the book, and of course, the important ratios as we step into 2026?
Oh, thank you, Manisha, for having me here. I think, first of all, wish you all a very happy new year. I think with the cusp of this new year, I can also firmly say that the bad days for microfinance are behind us and things are turning around as far as the industry is concerned. And also, as far as Muthoot Microfin is concerned, we are doing really well. We are growing at a reasonable pace. This year, we are slated to grow around 15%. So our asset under management, which was around 12,200 crore at the beginning of the year, will clock at around 14,000 crore by end of the year. And our disbursements are going well. Quarter on quarter, disbursements are growing. In the first quarter, we disbursed around 1,700 crores. In the second quarter, we disbursed 2,300 crores. And in the third quarter, we have disbursed around 2,500 crores. So as per plan, we are already at 6,500 crore disbursements. And we are likely to disburse around 10,000 crores in this financial year. So the growth rate is intact and it's back. We are growing at 15%. And the asset quality, most importantly, is improving rapidly. The portfolio that we have disbursed around 6,500 crore this financial year, the delinquency is in that portfolio is 0 plus is 0.5%. There's hardly any NPA. And overall, I think performance of the book is also improving. The collections are improving. So we are very confident that for the year, we will be, as per our guidance, between 0.5 to 2% ROA. We are closer to the 2% ROA. The most important ratios to watch out is basically our cost to income ratio. We were at the beginning of the year around 61%. At the beginning of the last quarter, we were at around 59%. It is consistently coming down, and we will close this financial year would be at around 55% cost to income ratio. But most important is the asset quality. So our credit cost, which was for last year relatively high at 9.4%. We had guided this year at around 4 to 6%. We are already at a lower spectrum of the guidance of 4%. This quarter, this is likely to go below 4%. So for the full year, we are likely to close below 4% in credit cost. And our ROA would be in the range of 1.75%, and which will translate into an ROE of 12 to 15%. I think that's the most important factor, and the basic is that we have started disbursement and we are growing at a 15% growth rate in terms of our AUM.
All right. I also want to talk about the bond markets, and you've tapped into the bond market very actively, very recently. Why are bonds now becoming a bigger part of your funding mix, and what are the numbers that you're working with on that side?
I think bond market is a very kind of important source of capital for us. As we grow, we are among the large microfinance companies. We are the second largest in the country. As we diversify our sources of capital and sources of fund, bond becomes a very integral part of it. Largely, if you look at our fund mix, around 50% comes from term loans from various banks, public sector, private sector, and foreign banks. Around 20% comes from structured products like PTC, direct assignment, which is also directly driven through bank channel. There are 30% of our funding comes from non-bank channels, which includes ECB and which includes NCD. And I think bond becomes very, very important for us as we grow and we are able to raise capital from other channels other than the banks. I think it is very important. We have been doing regular NCD issuance and we have been issuing ECBs, and these are all listed instruments. So it becomes kind of a diversification of our capital. Also, as we are growing, we are diversifying our asset book also. We were largely focused in microfinance business, which is joint liability group format of lending, which was generally 2 years of tenure, and weighted average on the book was 18 months. So bank loans were generally for 2 years. So that was perfect for that kind of lending. But as we grow forward and we grow, we are diversifying into individual loans. We are looking into a LAP, which are long tenor products. So we need funding which is more than 2 years, 3 years, 5 years kind of a funding. And bond becomes an ideal tool for us to borrow a long-term debt because largely when we issue bonds, these are 3-year paper, and when we do ECB also, that is 3 year to 5 years. So that helps us to have a good asset liability mix and have the flexibility to kind of cater to our customer, and it gives us also ability to negotiate on rates better, and we are able to pass on benefit of lower rates to our customers.
All right, so regular NCDs and ECBs are going to become a norm very, very soon. Also, how do you look at the digital bond online platforms? They seem to be really surging right now. Do you think this would also help you reach more investors, raise funds faster as we go ahead?
It's very, very important. I think bond market in India is still very nascent as compared to the global market. Out of like the global market is 140 trillion US dollars. India is around 2.7 trillion dollars, out of which I think majority is the government issuance and government entities which are issuing. Corporate market is around uh, half a trillion dollars, or just about a little bit more than that. It is evolving. I think retail participation becomes very, very important for us because it gives liquidity and ability to trade. I think as the bond market develops, more and more participation from retail investor will help the market to develop and allow liquidity to be there for people to participate in the market. I think as our equity market is developed, now you have a lot of domestic institutions who are holding up the market, even though there is volatility around us. I think bond market also needs a lot of participation for it to be liquid and the paper to be tradable easily. I think that is very important. And I think we as a player who are participating in the market, the wider the spectrum of investor we have, the better it is. And I think depth of the market is improving as we go forward. In the previous year, we had raised around 1,000 crores through the bond market. This year, we are looking at 2,000 crores. So every year, I think the market is improving and the depth is improving. I think days are not far where this will become as kind of tradable and liquid market as many of the developed countries have.
All right, so 1,000 crores last year, 2,000 crores as a target via bonds this year. Do you also see an opportunity to aggressively replace higher cost bank loans with lower cost bonds? And what is the target share for bonds in your funding mix going forward?
Yeah, that's the strategy actually. Basically, to replace the higher cost term loans with the bonds and to be able to raise capital as and when you need it, go to the market and tap the market and raise this capital, and to be having products which are long tenor product, which allows us the flexibility to churn this money couple of times during the tenor of the bonds. So that allows us a lot of room to negotiate and bring the cost down. Definitely, I think as we have been doing this issuance regularly, we will continue to do that, and the market is evolving. We are in a cycle where policy rates are coming down. Definitely, that will help us to bring the cost of fund down and make bonds more accessible also for retail investor, and at the same time be able to bring in efficiencies, pass those efficiencies to our investors as well as our customers.
All right, those are big bond plans coming in from Muthoot Microfinance there. Saif, as always, thank you so much for joining in, and thank you for spending time on CNBC TV18. But with that, let's go for a short break. When we return, we will discuss market technicals on the other side.
CNBC TV18 and India Bonds presents Bond Street.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer related documents carefully.